Good morning. Good morning, everybody. Morning, Charlie, Chris, Max, Corey, Benton, Sharif. Good morning. Hey, actually, you know what, Max? You were right at first. Because Chris said, okay, you win, Charlie. He never called second. All right. We're going to have a shadow. You're able to text in here now. Hey, David. Morning, y'all. All right, so real quick, we're going to should have a very large opening range gap. Yep, already marked up the top there. We have the open right here. So we have this big, huge opening range gap. This is where we closed. This is where we opened. I'm going to mark out the middle of it there. 196. There we go. Get that marked out. Yeah, so that's about, that's a 158, about an 80 point or so. All right, so what I'm looking at here, we see yesterday we just expanded up. We ended up hitting right at the middle of that 4-hour fair value gap that I said if we keep going up, that's the next area that we should, that I expect price to hit. Hit that around lunchtime and then just stayed under. Engineered all this buy side liquidity up here. We still have that sell side liquidity down here that I'm liking. Don't know if we reach down there because I'm still kind of bullish. But if I go to the weekly chart, I noticed this and I missed it before. We do have a weekly volume imbalance right here. I'm not putting a ton of weight on it, but if we start trading down here, that would be an area I'd expect price to at least come down through if it got close enough. So just have it there for, just to watch. I still think, now we have some buy side liquidity on the daily chart that we're looking at. From this high and this high, we have some relatively equal highs here on the daily chart. So I think we continue up. Ultimately, that doesn't mean we're going to not go short intraday. So I'd look at this wick once we get to the middle here, and then if we take out November's high. But we'll see. Because we might be leaving. If price doesn't come back and rebalance this potential fair value gap on the daily chart, then yeah, I'd expect it to go through that high there. So looking back at the 15-minute, we delivered. So here's what I want to note. We made this high yesterday up here. Then we came down, and then we made some buy side liquidity right here, right? We have relatively equal highs. This wick right here took out all the liquidity that was back here. So it took that out and dropped, right? So that traded, it traded nicely, delivered nicely up there. So that's going to be my current buy side liquidity for the buy side. Which ends up, it's turned out to be London high as well. And then we came down, and this wick right here, we have some relatively equal highs here. So this would be my minor buy side. And then we drop down. And basically what I'm doing here is from that run up yesterday, I'm marking out all of the internal range liquidity areas, which are the imbalances, right? And I'm marking them out all the way down to my sell side. Because here's my sell side. We have plenty of sell side liquidity here. So in between my buy side and my sell side, I want to mark out all the 15-minute fair value gaps, the internal range liquidity. So here, we took these lows and we left this fair value gap. So right now, we're going to see if we're going to respect the middle of it. That's going to be, I'm going to see if we do that. If we do, then we may continue down because we do have some nice sell side liquidity down here. But we'll see. And then what you can even do is measure out this high, this low, and we have equilibrium right here of this entire range. So for the overall market right now, we're in a premium. And we'll see if we expand. We have big news at 10 a.m. So we'll see if we expand anywhere. All this accumulation here. We might see some buy side get taken and drop. We just have to wait and see, because we have that's kind of what I do. We have reasons it can continue up. We have reasons it can go down. I want to see what happens here, but also let me get rid of this. But also, we have the middle of the opening range gap here, so I would not be surprised if it wicked up, tapped that, and then dropped. But right now, it's respecting this. It is still respecting that, and that's kind of how you know we may be potentially heading down based on the 15-minute chart here, is because we took these lows and we displaced through it, leaving this fair value gap. Now, does this hold and continue down, or we'll see what it does. But if it taps this, I would prefer to see it tap this the middle of the opening range gap before going down, and then not closing above this 15-minute gap. So that's kind of what I'm looking at right now. But of course, like I said, we got that high impact news. So we got close, and I wouldn't be opposed to seeing it run up and taking some of this minor buy side liquidity. But yeah, we'll just see. And like I said before, I don't look for a trade really until at least about 9:50 in the morning. I'll let the market kind of do its thing, because my framework really revolves around that 9:50 macro time, and really up until I can watch up until around 10:30. But like right here is our, let's see, is that the first presented fair value gap? Yes, it is. Right here's our first presented fair value gap. So if you're looking just from a 1 minute time frame based on the 2022 model, this would be an entry to go long, because you took all this out, all these swings out with some displacement up into a fair value gap and then continue up. I'm not taking that. That's not a trade I'm taking, because I don't. That's why you got to have good framework. Good framework, in my opinion, because if you're just looking at a setup without the framework, you can get tricked. Because I'm actually thinking I'd prefer more of a short, but like I said, I want to see if it wants to take any of this buy side liquidity out first. And mainly this 15-minute, this was pre-market though. So that's why it may or may not hold, but this is what I like to see. It tapped the opening range gap, the middle of it, or it got very, very close. I don't think it actually hit it, but it got very close, and it's respecting this 15-minute fair value gap. And if this closes below, well, we got 6 minutes. If it closes below the midpoint here, then I'll definitely be looking for a short. But it still could come up and take some of this liquidity here. And with it being overall bullish as far as the daily, it's a huge 4-hour gap right here. Fair value gap. It could come down some more before going up, but I also would not be surprised if this is our manipulation down, and then it just keeps expanding up. So we just gotta wait right now. I still like this range here of this high and this low. I still like this idea of it at least coming down to equilibrium here before and digging into this area before expanding up. But if it expands up, so we'll see. That news is coming at 10 a.m. too. We have also, if I look at the new week opening gaps, we've reached up in there yesterday. That's where that 4-hour fair value gap was also. Reached up into there. So we'll see if we drop down to this week's new week opening gap or not. We also have the new day opening gaps here. That's where we've kind of been in. So we'll see. I'm leaning. So that's kind of what I do too. I lean a little towards a direction that I'm looking to take my trade, but I'm always open to switching that idea up depending on what the market does. So I'm leaning more towards a short today. We have these volume imbalances here on the 1 minute, right around the open. Love volume imbalances as targets. But this is too close to target, because I'm not going to take a trade up here. But what I would like to see, if we did come down, I would like to see price come back through this first presented fair value gap. And if we got a short underneath these volume imbalances, I would appreciate that. Because that equilibrium was in this area, and then that big 15-minute gap. So I could definitely take a trade from around this area down to around this area and be happy. Yeah, and this was that 15-minute volume imbalance as well. We have another one here that got traded through with this wick. Then we have this one here. Right there. And that could be a target. Never got traded back into this one. See what's happening on the 5-minute. I really don't watch the 5-minute very much because I get most of my bias from the 15-minute. But I'll glance at it just to make sure there's nothing obvious that I should see. And also, there's a lot of times I'll look at the 5-minute and there's a really nice volume imbalance that I can use as a target as well. And today, if you notice, this is NQ. This is ES. ES is pushing down. We got a couple volume imbalances here on, here on ES. ES took this low, reached up into this fair value gap, and is pushing lower. YM is pushing lower. So right now we're correlated. Well, NQ kind of went up. So NQ needs to come down to be correlated. But yesterday, if y'all remember, NQ and YM was not correlated. So good chance of why I didn't get a trade until later. All right, so let's see. Market might not do much until 10 a.m. How'd everybody do yesterday? I ended up, I don't know if y'all saw, I posted on the post area on YouTube and in the Facebook group that, like, as I was shutting down yesterday, price finally displaced lower, and I took a trade right down to the little volume imbalance that I had as a target. Let me see if I can scroll back to yesterday. I posted this screenshot while we're waiting. Yeah, it was right in... Was this yesterday? Yeah. Yeah, it was a great trade. We had, oh, this volume imbalance right here. Let me see if my, it's not going to show the execution. I don't know why TradingView does that. It takes the execution. It only leaves the execution there for the day. But yeah, it was, had this volume imbalance right here. I took this short right here, right down to that volume imbalance. So it was about close to 30 points. And that was at, yeah, like 10:47, right after I got off. It's like, dang it. Oh, yeah, and I talked to TradingView before about certain functions that are not there that I've seen other people have, and they're like, yeah, it's what TradeOvate allows TradingView to have, and I'm like, dang, TradeOvate. So yeah, it's a TradeOvate thing, and I have my live personal account as the leader. Because I have my account through NinjaTrader. And so I use that as the leader and connect it inside my NinjaTrader as well to copy to my PAs. But I tried all different brokers, different ways, and nobody can connect the way you need to copy your PAs as well with having a live account other than NinjaTrader. So I was like, man, stuck. I have to use it. Because there's also, I've seen where like, because I mark it in, right? So if y'all have seen me execute, I'll just hit buy or sell. And when you hit buy or sell, I have to go in and manually like click and put a stop, click and put a take profit. But I've seen other people with live accounts or different brokers where they mark it in and it gives them a little option, a little take profit, a little stop where they just click it and drag it. I'm like, I want that. That'd be nice. And TradingView said the same thing. They're like, it's TradeOvate. They won't let us do that. Dang. All right, so let's look at the 15-minute here. 15-minute chart. We reached down here. I want to watch because, like I said, this could be a manipulation down and we could be expanding up. I'm not ruling that out because we came down, we respected this 15-minute gap, all right? And we're not, like, we closed inside this one, but we are pushing up. So we may close outside of it and this turn into an inversion. And if you look here, I really want to watch this. We could have a 15-minute fair value gap develop here as well, overlapping an inversion. And that would tell me we'll probably take this buy side liquidity, close the opening range gap, and take this this minor and then this buy side liquidity up here. And that's where I would shift into potentially looking for a long. Because overall, I'm still bullish daily for now. So that would kind of align with my daily bullishness. So we'll see. So that's just something I want to watch. So that's why I'm always constantly, watching and reading. You always got to be watching and reading. Let's see. All right. We got 10 minutes to the news. It's about to be 9:50. This is what I really want to watch right here. And then that would be above our first presented fair value gap. And the reason I do all this too where I can kind of shift what I'm looking at, and I'll go long or short or whatever, is because the main thing is because I go for the low hanging fruit, right? So like I'm only going, I say only, but I'm going for like 30 to 50 points typically. And in ICT world, that's not a huge trade because, like his silver bullet, you can really, some of these trades hold them for a long time, for an hour, and get, 100 points or more. But that's not, so I noticed a lot of his teachings, especially on the 2022 model, are teaching you the bigger trades. And how to see the market from kind of like a zoomed out view to know like, okay, price can go here and it could go all the way, should go all the way to this area. And you get a very big trade. You hold it for a while. I'm not there yet. And I really don't know if I ever will be because it's just easier to go for that low hanging fruit because I can be wrong and still make money and still win, right? Like I could be wrong overall. Like I could say, like, for example, let's just say I'm thinking like what I just said. Oh, this might be manipulating down and we can expand up. Okay, let's say that kind of works out and I take a trade and I take profit up here. Well, what if it stops and then it continues down? I was wrong overall, but I was right in the terms of the low hanging fruit and making money. So that's why I do that. All right, yeah, this might not do much until the news comes out. Yeah, Shadow. Yeah, that's what I saw. Even like one of his first videos, I don't know if it was the first or second. He said he shows. I don't know if y'all remember, but he shows some executions, and he's like, "Yeah, I took this one, little one, little one, little one, but then I had this one from here all the way down here, and he got like 150 or 200 points." He's like, "I'm going to show you how to do those," and I'm like, that's awesome, but I don't know if I'm ready for all that. But we know too with prop firms, man, you'd make 30 points a day, 30, 40, 50 points a day, then across multiple accounts. Man, you're killing it. Sharif asked if I have time to make a video on drawing all this stuff. Yeah, I definitely want to do that because I made one a while back, but it was a while back and I didn't know as much as I know now. And I don't know how long ago that video was, 4, 5, 6 months ago. So I definitely have a different mindset when I'm doing my framework now. So yeah, I'll definitely make a video on that. And that's kind of what I'm more so gearing towards whenever I do trading videos, because I don't want to teach ICT per se, because he has all that on his YouTube for free. But there's things that I think are important that can be cleared up a little bit, if that makes sense. Excuse me. So yeah, such as the framework. Like, there's not a specific video of just like, hey, here's your framework real quick. Here's, a glossary of terminology. So things like that is kind of how, whenever I make those type of videos. JJ, what's up? How's it going, man? Morning. Good to see you. My buddy JJ, we go back, way back. Way back, car selling days. Yeah, we got 5 minutes now, about 5 minutes. If y'all ever want to know the time, bottom right is the time right here. I've seen some other people, YouTubers, they'll put like a clock or whatever. I don't know. I don't know if y'all care about that. Shouldn't my first presented fair value gap include the volume balance? So yeah, technically ICT does include volume imbalances when he marks out if there's a volume imbalance, like just like this. Yeah, you would include that. Correct. So I noted, basically I took a mental note of the volume imbalances, but yeah, you can do it either way. As long as you know that that is there, that's important. So yeah, I did mention them earlier. I just didn't mark it, combine it with it. But yeah, you're right, Tyler. So if you ever see, same thing here, for example, you have this fair value gap, and then you have this volume imbalance. And actually it's 2. This one's very little. So you'd include that volume imbalance with it. Appreciate that, JJ. Yeah, it doesn't look like we're going to do anything until that news comes out. Now, also, I want to note 15-minute chart. If we do get this fair value gap right here, this is still the opening bar, right? And I've said it a million times. I'm going to keep saying it, that what I noticed, what I've come to the conclusion of, is the opening bar fair value gaps are not as strong as what you would normally see for fair value gap. And it's like a 50-50 of it getting traded back through. I don't know that that's the case. I don't know. I've never heard ICT say anything about this. It's just something I've seen and something I've tracked for multiple months. Is I many months ago I noticed that, and I literally did a study to see how often the opening bar fair value gaps on the 15-minute, specifically on the 15-minute, and also the 1 minute, but most specifically on the 15-minute, I wanted to see how often they get traded to or through if there's a reason to go short. Have to have a reason to go short. If not, then yeah, it'll typically hold. But if you have a reason where it could go short, then I've seen it get traded through very often. So we have 2 minutes, and this will turn into an inversion. Well, not quite. It depends where it closes, right? But if it still respects it, then it might not. So we'll see. See what happens here. But then this fair value gap, that's what I'm saying. I would, even if it creates it, I'm not fully on board with this trading back down into it and then continuing up. Not yet. But I'm going to mark it just in case. Ooh. I just busted my elbow on my desk. You heard it. All right, I really, so that's big news, right? It's high impact news coming out. 45 seconds. We could see it shoot up, take this out, and then drop. I find it hard that we're going to leave these volume imbalances untapped. And then we have a lot of reason to come down still. We have this 15-minute volume balance that never got touched. We have nice sell side liquidity. It delivered pretty well to the long side back here. Up here, right here taking liquidity, right here taking liquidity. Let's see. 10 seconds. A C1MVB. Don't know that, Chris. 1 minute volume imbalance. Gotcha. Yeah, it was there, but it got traded right through. Yeah, it's that, holiday Kahlua coffee, huh? All right, well, it's kind of bouncing around. Spiked eggnog. Yeah, you got the Jack Daniels eggnog. Here we go. Get on up there. We do have this, like all these right here on the 1 minute. Right here. Reaching into. I would, if it's going to get up this high, I wouldn't mind seeing it just kind of like take this out right here. Maybe even close the gap. I don't know. Let's see. Let's see where it goes from here. So go back to the 15-minute. We got this opening bar, 15-minute gap now. This has turned into an inversion. Now, our first presented fair value gap. Now, what I'll do is if price does continue to move up, take this minor buy side, and if it ends up reaching up this high up here, that's whenever you can say, all right, this was manipulation and we're expanding up, right? But I can still look for, once we do all that, I can still look for a short in this area down to some. I wouldn't expect it to run all the way down to sell side or down here at that point. But that's where once we reach draw to an area, I can take an opposite. Basically, most of my trades are going to be opposite, unless if we have a lot of room to go. But I let it draw, and then I'll take a trade, like a short down to a specific area or a target, depending on what happens there. Because we're already up in a premium, basically. And most of my trades, because of the 2022 mentorship, revolves from going from premium to discount or discount to premium. Rarely do I said this on one of the other streams, rarely do I take a trade, up in here to continue up. Unless if I really see something higher and the market's, on a higher time frame, I can really frame out a reason to go higher. But got very close to that minor buy side there. So where I could see myself going long is if price, like let's say stopped here, right? Let me get rid of this. Let's say price stopped going up. And then it came back down to this area where that new 15-minute gap is and that inversion is. Okay? Let's say it reaches back down into here and then it stops. And then we see obvious displacement back up and like my setup to go long. Then I could take that expecting to go to opening range gap, the high of it, or this buy side liquidity. That's the only case that I'm taking along. Other than that, I'll wait for price to reach up and get to one of these areas and then a short. Or if like here, we just have obvious displacement always changes my mind on anything. So if we have obvious displacement down, then I'm like, okay, we're likely to go start heading towards those targets to the short side. But that's only if we have targets to the short side. If there's no targets, then it very well could be manipulating. So always keep that in mind. You have to have reasons for price to go somewhere. You have to have targets. Without targets, it means nothing. Like I can't take any trade without a target. It's like, I call myself Sniper Beast. That revolved from Apex, right? Apex sniper system and all that. But I kept that because I really like the idea of being patient, waiting. And what do snipers do? Like real life snipers, they wait. One shot, one kill, right? So that's like literally what I'm doing with trading. And so that's the thing, just being patient and waiting. And does a sniper shoot at anything, at nothing? No, got to have a target. So it's kind of why I like that. Keep my head right. Everything is about keeping my head right. See how we had this if we had this we had this little fair value gap coming down, right? And immediately came back through it. That's because we got so close to this minor buy side liquidity here and we came back down. So I wouldn't expect price just to come down yet. I expect this to happen right here. Closing that opening range. So this is perfect. Let's just go ahead and come on up here, take this buy side liquidity. And it doesn't have to reach this high because we close the opening range gap now. That's a draw. This is a draw on liquidity here. We took minor buy side. We hit this opening range gap. If we immediately, when I say immediately, fairly quickly, invert this gap, if we create this fair value gap, and if we displace and invert it, I'm thinking we're going short. That's the high we're going to go. If we don't, we could trade down into it. Then we could come up and take this high. And at this point, literally all I'm waiting for is for price to reach one of these areas. It's got to reach where it's reached these areas. Now it has to displace. Or if it doesn't, it's got to reach this area, displace. So that's literally all I'm waiting for now. Is just the displacement. And of course, when I say displacement, that means taking a swing low with a fair value gap. So this is a crucial one here. And then if I got a trade up in this area, this is my target right here. Right in this area. And look at this wick. This was a wick right here to read. Because we have all this right here. This wick reached and body closed up here. See where all the bodies closed and all these wicks are reaching? This wick here. And then watch this. If I measure out this wick, look at the next ones. They could not reach or even close below the midpoint of this. So after you have the reaching wick and then you have these, you know price is going to expand higher. That's reading the wicks. When I learned how to read these wicks, it changed a lot for me. I have a little bitty volume imbalance right here. It's very little. But watching everything at this moment. Double check my copier and everything is good. Yeah, looking good. Yeah, because see, look, let's just say, well, actually, if we did get a trade up in this area, that's around 210-ish. And then down here, that's not a lot of room. But this fair value gap, this 15-minute one, we might be able to get 30-ish points. But I don't think when we expand or when price decides to move, it's gonna move a good amount. I think today we're gonna have a nice movement. So let us wait. Now again, here we can include this little volume imbalance with this fair value gap. Wait, what happened here? There we go. We respected the midpoint of it here, but then look what it's happening. We might see our displacement. We might see an inversion. And this is why I marked this one. And I said, this is going to be a key fair value gap to watch. Because why? We reached, this is the first the last fair value gap after, before reaching a liquidity level and a nice level here with the opening range gap high. So once we reached above there, this was the last push, the last volume coming in to push it through. And now we're immediately inverting it. We have a little volume imbalance right there. This is an inversion. We have a little fair value gap that could be happening right here. So this, if we could take this low here, I would likely short this right here. Yeah, we took this low. I would likely short this 212, and I'd reach right down here to this 15-minute fair value gap. And it more than likely will come down to this first presented one. But this would be my low-hanging fruit right here. And then my stop would actually be at the high. Yeah, I like that. And then this, I wouldn't be surprised if we traded through that 15-minute gap. So I'm going to go short right here.
Order filled.
Stop up there. Let's see, we're at 212. Took this volume imbalance. I was expecting that. And I could be wrong. It could expand up, but let's see. I'm going to target this 15-minute. See, now what I don't want to see is this fair value gap happen right here. I don't want to see this. It like invert. I want to see it come back down and trade through, and this blue bar will be an order block, a bearish order block if we continue trading down. If not, then that would probably send us higher if we don't close this potential gap. So, but that's why my stop is up here, because I fully expect that price could trade up in this area, especially with that volume imbalance there. But I do want to see it close this potential fair value gap. And then this will create like a intermediate swing, intermediate high, swing high. But I do want to see this get closed. It don't look like it's going to close. So now it's 50-50 on it continuing down or not. Just because this little gap, I do want to see it trade back through. And then I want to see this swing. If this bar closes down and creates this swing here, then I don't want to see price trade back above this swing. And technically, I'd be able to move my stop above this swing high. I'm not going to until we make a take out this low. Then I can move my stop down a little bit to reduce my risk by about 10 points. I think I'm going to target the first presented fair value gap right there. But once we get down into this 15-minute gap here, if we do, then I'll definitely move to break even plus some profit. But I do need to see, I'm going to watch this wick right here because this wick reached down. Bodies are closing here. I want to see price trade below the midpoint of this wick and then preferably take the low of it for sure. And then once we take the low of it, I don't want to see price trade above this swing high right there. And then I'd feel a little more comfortable. I mean, I'm comfortable, but you know what I mean. I'd feel like the trade is still going my way. So we shall see. And if we could take this low here, this would just be a nice order block right here. This bearish order block. Let us see. Chris, the futures guy, just subscribed. Thought you already subscribed. Is this an imposter? All right, so we did invert that little gap that happened, so I do like that. We do have this swing high. I don't want to see it take this swing right here. It could, but it could because we haven't made a new low. But I still don't want to see it take that swing high. So let me put a little thing there, little line for visual. Now it's kissing that volume imbalance again that was there. So since it kissed it perfectly, I want to see it go ahead and just drop now. See how it came back up, kissed it? Let's just see it drop. Maybe. All right, don't take this one. As long as I don't take that, well, see, every potential little fair value gap to the long side, a busy, I want to see it rebalance immediately. Yeah, there we go. See how it potentially left it a little gap and then it came down and rebalanced? That's what I want to see. Although, I want to see it should displace already. Like right here, it should have displaced and took these lows and it didn't. So I don't like that, but until it takes this swing, if it takes this swing, it's still okay, but it's not as good of a sign. You see how this, it just needs to displace already. Let's go ahead and expand this a little bit so we can see better. We just wait. But I'm continuing to read because sometimes there is a reason to get out. But for now, I don't have a reason. So, and with the price action working the way it is, and remember today, this is NFP week as well. But with the price action work, see how this one reached down right here to the midpoint of this wick? That's not a good sign. And then the body coming, looking like it's going to close up here. That's not a good sign. So I do need to see it continue down. It's not a reason to do anything. It's just a sign. It's just what I'm watching. And then we have that. See how it reached down, closed up here. So now I want to watch this wick. And I want to see price trade below the midpoint of it, just like that. So I'm still watching this wick right here. That's why I have my fib on it. Still need to make a lower low. And what I was going to say is because price action, the way it is here, it would not be a bad idea to take profit in this inversion around the midpoint of this inversion or around this 15-minute fair value gap that I have here, because it may not trade all the way down through to the first presented fair value gap. Because you have this wick that I mentioned earlier right there. Here's the midpoint of it, which is just above the middle of the inversion. So, but you see how these wicks are reaching, and bodies closing up? I really need to see a body close down. Until that happens, yeah, here we go. Give us that displacement. That nice displacement. Here we go. Still reaching. Just reaching and the bodies are closing up. I need a body close down. We have a little volume imbalance just trying to leave there. So, but here again, look, this bar. Reaching right up into this volume imbalance and dropping. So this is a good sign still. Now we have this one closed, so that's good. Needed to trade down through the middle of this wick here. Here we go. Now, again, when we reach down into this area, this is where I'd be cautious. See, just like that. We don't want it to reject here and just go up. So I am reaching for a little further profit than maybe what I should, but the middle, ooh, look at that. I'm definitely moving to profit. Because if this rejects here, and like really I can get out anywhere here because we got very close, 2 points from my target. So we're rejecting. We got 2 points from my target, but that was a far reach right into that 15-minute gap. I really could have closed because we were so close to my target there. But I'm just going to hold and see if we can reach down a little further. And if I tighten my stop, I'm probably going to get knocked out with this price action going on. It's hitting. Let's see. If it really has a hard time at this 15-minute gap, I'll just close. I mean, I can't lose right now because I'm in, my stop's in profit, but see the midpoint of the 15-minute inversion as well. I think, I mean, price action is looking, we're looking like we want to reach down a little further, but we'll see. Yeah. We have this 1 minute. Here, let me get rid of this. Oh, crap. Hit the wrong button. We have this 1 minute gap. Oh, yeah. Look at that. We have this 1 minute fair value gap here. So I want to see if we hold up in here and continue to drop. See, we got 2 points from my target. But, you know, if I get knocked out, it is what it is. Reached right up into this 1 minute gap. Let's see if we can head down now. We got 5 seconds. Let's see where this one closes. We should not come back up here. But that 15-minute, that's what I was saying. That was the best target right there. So I may take a smaller win than what I wanted. And it got 2 points from my target. But it is what it is. That was me reaching for a little bit more than my low-hanging fruit. Just because my low-hanging fruit was like 30-ish points. 212. Yeah. So I was reaching for a little bit more. So we'll see. We'll see if we drop through. I like this fair value. Here, let me go ahead and mark it so everybody can see. Right here. That's why I have my stop right here, and I'm kind of just letting it go and seeing if this holds up and then we drop further. And I might be ready to close if we reject here again. Because see, it's not... I have my chart expanded, but it's not really a huge amount. Yeah, see, look. We haven't touched that 15-minute gap again, so that's kind of what I'm waiting to see. At the moment, I don't think we come back. I mean, it might. Let me see. I think this was just a reach down, and we do continue up, but I want to see it try one more time into this 15-minute gap before I'm ready to get out. Because look at the wicks here, and look at the bodies. None of the bodies have even closed inside this fair value gap. That's why I'm kind of like, I think we might try again one more time. Yeah, there's no getting out of this. Well, at any of that point when it was down here was not a bad idea at all. So if you got out, if you took this, that's great. It should not come back above this swing high here, but let's see. I may just exit. It's taking its sweet time. It's not really trying this 15-minute gap again. Still no bodies have closed up here. Yeah, I probably should get out. Take what I can. Testing that gap again here. Let me get rid of this one just so we can see a little better. There we go. All right. Hit that 15-minute again. I'm probably going to tighten up quite a bit if we can't get down there. Actually, I'm going to go here. And I'll just close it if we struggle. It's because the way price is also moving. It's bouncing around. Like, you can easily... There we go. There we go. Just going to put my stop there. If we can't get there, then we can't. We're so close. Push down. Oh, see? Look at that. Price action is just funny. I'm closing. Because, man, I don't like the bouncing around like that. Oh, there it goes.
Order filled.
Oh, hey, because of that delay in the price action, I actually got a nice amount on that. Look at that. Across all my accounts, after commissions, 9,300 on that. That wasn't a huge trade, but, man, it was nice. Now we go. Yeah. Of course. But see, that's I'm with y'all. Like, the way it kept just popping and going and popping up, it's like it because I'm overall bullish, like on the daily. My thing was, okay, is it going to reject? And the way how price kept just spiking and popping and spiking, I was like, man, this thing could just go shoop, fly up, you know? So that's why I was kind of like, So it did reach down into here. At this point, I don't know what it does. I don't care what it does. I'm out. And that's why I take my low-hanging fruit. I can't stress that enough. Go to executions. There we go. We can see it. So I got close. See, look at that. It's 178, 75. Right here. My target was right down here. 3 points away from my initial target. I'm good. I'm good with it. Yeah. So Benton said my original target was mid of the first fair value gap. Got out in the 15 minutes. Yeah. Nothing wrong with it. Nothing wrong. This was, like I said, this 15-minute right here was the lowest hanging fruit. So that initial drop, I mean, that thing dropped. That initial drop would have been a beautiful target. Bam, you're out, no stress. I don't always like the easy route. So I figured we'll reach to this first presented fair value gap because we never touched it again. And, you know, I liked it. But, of course, I had to decide, let's go for that through that 15-minute gap that wants to hold up a little bit and give myself this nice back and forth. Yeah, if price wasn't so jittery where it was shooting up and down so much, it would have been an easier hold. You know, you could just hold it. But yeah, that the way it just so quickly just would zip up and down 10 points, 15 points, just like, yeah. Cool. Nice. That was a nice trade. 10:30, like I said. If I don't get within my framework, if I'm not in a trade by 10:30, I'm usually not going to find something. Because I frame it out. I frame it out for that time frame, for what I'm looking at, what I see, and I just wait for it. I'm a sniper. We're snipers. One shot, one kill, one trade. That's it. Done. Across 20 accounts and a live account. Man, it adds up. I'm telling you. It adds up. So as you can see, across 20 accounts, $9,000, 9,300. which comes out to about, depending on account size, between $400 to $600 per account. So, yeah, beautiful. All right. I hope y'all have a great, okay, let's see. Answer some questions for a minute if we have any. What made you take the sell when your overall bullish bias for the day? Great question. And actually, I struggle a little bit explaining this sometimes. So let me try. The reason why I'll take shorts and longs. If I'm bullish, I'll take shorts. If I'm overall bullish, I'll still take shorts. If I'm overall bearish, I'll still take longs. And because the reason why is we know price doesn't go in a straight line, right? Price, if it's bearish, it's doing this. We know that, right? So if I have a good level or a good reason when price comes down here, and let's say I have a 15-minute fair value gap right here or something, and I know that when price came down, there's a very good level right here at this area. So let's just say this was sell side liquidity right here, right? Like we had a very nice sell side liquidity right here. And price was just coming down, making its way down, and it hits that sell side liquidity. Let's say it takes that sell side liquidity a little bit right here. And we had a really nice 15-minute fair value gap right here. Okay? But I think price overall will continue down, over the next couple days or whatever. But we took this sell side liquidity. So in the intermediate, in the intraday, from right here, if I get a setup to go back to this 15-minute fair value gap, where I think we'll pull back to and then continue down, that's where I'll go long in a bearish overall environment, if that makes sense. So the same thing vice versa, where I can go, if you flip this, and I can go short in an overall bullish environment. That's kind of what I'm looking at. And that's why, I don't think that's really an ICT rule thing. I'm not sure. That's just kind of my development at using ICT concepts. So if I believe overall price on this 15-minute can continue up, just like we did here, like we reached down, this very well could be the manipulation, right? And price could keep expanding up. But we reached up to that minor buy side liquidity. That's an area, just like I was explaining, where in this opening range gap, where I feel comfortable enough that we drew to, and then price could reach down to something. For example, this 15-minute gap right here that we had, and inversion. So price reached up. I feel comfortable that that's as far as it'll go for now before doing a pullback. So then it pulls back to this area, and then now it might keep going short, but I think it's going to expand up and keep going up. So that's kind of what I do, if that makes sense. I hope that explanation made sense of it, but that's how I can be overall bullish and take a short and vice versa. Yeah, Ben, if it aligns with time as well, that's a big thing. So, ICT explains the most important things are time and price. Time and price. So that's why I trade. I start looking for my trade. I frame out everything and I start looking for my trade around that 9:50 time. And I will look and take an entry all the way up to 10:30. However, the macro that he calls it is basically from 9:50 to 10:10. But if I have an entry, if that framework still hasn't played itself out before 10:30, then I'm still looking for the trade. It's just personally, and I know he'll even say all the way up until 11 a.m. you can look for it as long as the trade hasn't played out within that framework after 11. But I prefer 10:30. That's just kind of my thing because discipline issues. So, yeah, 15-minute fair value gap worked well. And, it overshot it here, closed through it, but it's coming back up. It's not leaving any fair value gap or displacement down. So, yeah, I think we could keep expanding up overall. Maybe not, but you know what? That's none of my concern anymore. I just reevaluate the next day when I come in, check out the framework, see what happened, and then do it all over again. Thanks, Max. Yeah, hopefully, and that's my goal with these live streams, showing patience, discipline, and, just kind of what I've learned along my little way here with ICT. And it's been paying out. It's been paying out. So I don't care what no one says about ICT. Love them or hate them, it works. That's my slogan right there. Love them or hate them, it works. For me, anyways. I've been getting paid. So, all right, y'all. I'm going to head off of here. It's my time. And, yeah, I should be back tomorrow. Okay, so here's the thing. We have NFP Friday. So, Wednesday and Thursdays can start getting a little wonky. So we got to be careful. I got to see what the news is like. And I likely will be trading, so... But just always watch out for that scheduled stream. That's how you'll know if I'm trading. I should be good, though, for the rest of this week. Wednesday, Thursday, and Friday. So, yeah. All right. Hope y'all have a great rest of y'all's day. And, as always, trade well.